Alright guys, in today's video we're going to be going over low resistance liquidity run versus high resistance liquidity run, and we're going to be explaining the difference between high resistance and low resistance. A lot of people, low resistance versus high resistance, they don't know what the difference between them is, and like the trading market conditions that can help you indicate if you're in a high resistance run, which is very unlikely or very low probability, and then low resistance, which is high probability because it just delivers price so smoothly. So that's what I'm going to show you here. And we're going to go to the 4-hour real quick, and we're just going to see, what is the what is low resistance liquidity? And to me, low resistance is pretty much big expansion moves. That's kind of what I see it as. Low resistance, big expansion moves, and then failure swings. Basically, failure swings is like you don't break market structure. So this is kind of what it means. So failure swings are like this. You don't break market structure. You never break market structure, and you never near it. So that's kind of what low resistance is. And so whenever you trade back down to take all this out, all this low resistance liquidity that was built up, whenever you boom, breaker form, you break structure and you have that change in the steady delivery, you deliver, usually complete the market maker model you were creating there with the low resistance, and you just run right through all those lows and those failure swings. That is what low resistance basically is. It's just big expansion moves, failure swings, and you rip right through it. ICT always said it's like a hot knife cutting through butter. You just slice right through it nicely, and you have no problems with it. So that's kind of how I see low resistance liquidity runs. Low resistance liquidity runs, just beautiful trading conditions. High resistance liquidity usually have small range environments. It's like a range bound market, and then eventually you have pretty much price lags broken through. So what I mean by that is price lag. So price lag is from high to low. You usually have that broken through. Boom, you break that, and then you rally higher. Then you create a new price lag right there, but you don't break it. Boom, boom. Then you break that another one right there, and then you create a new one. Boom, 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 and then you break that one. That is pretty much high resistance right here. It's pretty hard to trade during these type of conditions. I don't like trading high resistance liquidity runs because it just isn't favorable. Honestly, you can trade it honestly, but it's very, very unfavorable because whenever you come back, boom, you take this high out. You form a new one, boom, boom, and you break it, and then eventually you have that change in the state of delivery. You have that breaker form with a fair value gap unicorn. You're gonna chop boom, 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 and it's gonna take a while. It's gonna probably stop you out if you trail your stop loss to break even. So it's gonna be one of those trading market conditions where it isn't worth it. Sometimes it's just better waiting for a low resistance run, and this right here is a low resistance liquidity run. Boom, very clean, very nice. You can just see it. You usually spot it out. And very clean right there, very clean. I'll show you the diagram of low resistance. This is low resistance here, just clean market structure to the upside, and then eventually high resistance is pretty much the opposite. It's pretty much you're breaking lows, you form new ones, and you're breaking those lows, and you form new ones, and you're breaking those lows, and you're just delivering like that. Honestly, that's high resistance versus low resistance, clear as day. This right here would be high resistance again to me. You can just see it, doom, 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 doom. We're just chopping range bound conditions. All right, so this is kind of all low resistance here. You can just see it clear as day. Beautiful delivery here for me. It's like all low resistance. And then again, this is all low resistance here. And this right here is all high resistance here. See it clear as day. Just clear as day. This is all high resistance. This is all low resistance right here. Low resistance run. This is all low resistance. Alright, so this is another high resistance run right here. Before I go, again, just let me show you. Let me indicate it to you why. So boom, and then eventually we break this high. Boom, eventually boom, we break this high, and then boom, we break this high. Just indicating to you guys why it's high resistance here, because a lot of you are gonna be confused. Boom, and boom. It's pretty simple and sweet. And then eventually this is why it's low resistance here. Boom, no failure swings broken. Boom, boom. Just low resistance, giving you guys more of an indication as to why what makes it a low resistance again. Boom, 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 boom. See, perfect.